What is crypto really worth? There's on the one hand the people that say it's worth nothing, and that's because there are no future cash flows of Bitcoin, for example. Right? When we buy a house, we've got future rental income. When we buy stocks, we've got future dividends. When we buy Bitcoin, we have nothing. And so some people say that Bitcoin is just red poison squared. That's what Warren Buffett said, that in the end, Bitcoin should actually be worth zero. But then there's also the other camp, the camp that says that Bitcoin should be worth everything because it's the hardest of the monies. It should be worth more than fiat currency. It should be worth more than houses potentially, because houses also get artificially inflated in price due to the debt. It should be worth more than stocks potentially, because stocks might also not appreciate that much more compared to monetary expansion. If we are realistic about this, we cannot know where Bitcoin will be in 50 or 100 years. What kind of camp will be right? But I do think there is a way to value cryptocurrency independent of the final outcome. We are not valuing Bitcoin based on its future cash flows. We are valuing Bitcoin based on how much people are currently in profit or in loss. And that's shown in this chart. Now, why would that even matter? Why does it matter if people are currently in profit or in loss? The reason is there are some people that just believe in Bitcoin long term. And when they are in losses, they might just continue dollar cost averaging into the asset. They might continue buying. When they are massively in profit though, they might consider taking some of their profit and then reallocate this towards other asset classes just to have a diversified portfolio, just to not drop 60, 70, 80% in net worth by having everything in Bitcoin. So the approach works with psychology, with a psychological anchor point, right? Everybody looks at the current price relative to the price where the asset got purchased. And so that's why charts like this form. What we see in white is the Bitcoin price over the very long term. So it starts in October of 2010, roughly 15 years of data. And then this colored squiggly line, that's how many people are, relatively speaking, in profit or in loss. It tends to fluctuate around zero, because when people are in loss, there tends to be more dollar cost averaging, there tends to be more holding. When people are in profit, there tends to be some profit taking every now and then. Now, currently people are in profit. Does it make sense to sell everything? Not necessarily, but it also doesn't make sense to be as much exposed compared to when Bitcoin was only at 16K, or say at 5K, or say at 3.5K. What I find interesting around this chart is not just the macro picture. I think the recent development is interesting as well. Because let us zoom into the recent net unrealized profit and loss. So that peaked when Bitcoin was at 73K. It peaked again when Bitcoin was at 95K. And now it's again relatively high at 111K. Now the Bitcoin price went higher and higher with each of those peaks, but the net unrealized profit actually slightly went down. It was higher when Bitcoin was at 73K compared to when it was slightly below 100K compared to right now. So this is slightly going down. Let's zoom in again to make this clear. And because of that, we can say that the market is not necessarily heating up over time. The Bitcoin price is going up, but the net unrealized profit and loss is not going up in the last 1.5 years. So Bitcoin is growing at a healthy rate. People are taking profit in tandem with the price appreciation. It's not like everybody has unrealized profit in their portfolio dying to take that profit. And the reason for that behavior also seems to be clear. There is constant buying pressure by Wall Street. And that comes from two major sources. It comes from the ETFs, so that's the area in purple, and it comes from the Bitcoin treasury companies, mainly MicroStrategy, that buys up more and more of the supply. Now, this shows the asset under management of those entities measured in Bitcoin. It's a bit under 6 years of data, and it seems like this is going up faster and faster over time. At least it's going up in a linear fashion in the last 1.5 years, despite the price having more than tripled since then. So the demand for Bitcoin is not slowing down. The demand in US dollars has also tripled. Otherwise, the number of Bitcoin wouldn't get acquired at the same rate. It now takes 3 times more US dollars to buy the same Bitcoin, but the number of Bitcoin still gets acquired without any sign of slowing down. Now, of course, crypto goes in cycles. Sometimes we've got a bull market, sometimes we've got a bear market, and the bear market tends to have a reason, right? Usually it's some kind of institution blowing up. That might be Silk Road, it might be Mt. Gox, it might be a lot of failures during the ICO boom, it might be FTX and Terra Luna and Three Arrows Capital. There's always something going on that flips it around, that turns the bull market into the bear market. But let's work with the assumption that in the next 12 months there is no such blow up. So let's say Binance is still around. Let's say there's no super hostile regulation around crypto. Let's say everything stays the way it currently is. How much growth in that scenario should we expect, say, for Bitcoin over the next 12 months? What's realistic? What can we anticipate? Here is how I approach this question. What we see over here is the stablecoin market cap. So how much money is currently in crypto? The way this chart is going up is by people depositing their fiat currency into the crypto world. So let's say you've got your hard-earned fiat and you send this over to Binance or another centralized exchange. The centralized exchange will take the fiat currency, send this over to a stablecoin issuer. So let's say USDC or let's say USDT, right? Circle or Tether. The stablecoin issuers then hold custody of the funds. They might also buy treasuries, right, to generate some returns. And in return for holding the funds, they issue the tokens on chain, right? They mint new stablecoins and then send this over to you for speculation to buy various cryptocurrencies. And we can see the creation, so the minting of those stablecoins in the chart here. So that's how we get an estimate of how much money is flowing into the market or potentially out of the market. This here was the Terra Luna collapse. It started a bear market where then also FTX went belly up. And since October of 2023, the stablecoin market cap is going up again. And it grew from that point to today by more than 100%. The cryptocurrency market cap during the same time went up by 273%, so almost 3x. There is a leverage effect here because a dollar invested into crypto tends to increase the market cap of a cryptocurrency by more than a dollar. So let's see what happened in the last 12 months. How much did the stablecoin market cap appreciate? The answer is 51%. How much did cryptocurrencies on average appreciate since then? The answer is 87%. So the leverage effect tends to slow down somewhat. The ratio is also not very stable because we've got more volatility in crypto prices versus the in and outflows of stablecoins. But in general, we can quite safely say the crypto prices go up at least at the same rate as the stablecoin market cap. So a 50% increase over the span of the next 12 months. If nothing is blowing up, if there's no black swan event, that's my minimum expected return for the crypto market across the board. Now, what do we do with that knowledge? We can potentially deploy even some leverage, right? This is where it gets a bit more risky, but we have to take advantage of some opportunities. The question though is, how do we potentially tame the risk? How do we not go broke by taking on leverage? One way is to use stop losses. One way is to limit the exposure in case it turns around. My favorite way to time the market is to use the 120-day simple moving average. So what we see here is Bitcoin, and the 120-day SMA is the line in turquoise. The strategy is very straightforward. We go long, so we bet on rising prices whenever the price is above that moving average, and we bet on falling prices, or at least we get into cash whenever the price is below the moving average. So we are trading the medium term, and we limit our risk in case things go down so that we don't get caught up in a 65% decline. Currently, we are above the moving average, so we should be betting on rising prices. And the reason why I like this indicator so much is the following. I have backtested this long-short strategy with various moving averages. The data starts in August of 2017. I've backtested all moving averages from the 2-day all the way down to the 200-day moving average. And I backtested both the simple moving average, and the exponential moving average. And so the result is in this chart. On the x-axis is the moving average duration. On the y-axis is the annualized performance, so the geometric average of the performance over all those years. And the black line over here, that's the comparison, that's buying and holding over the period. The exponential moving average is in red. The simple moving average is the line in turquoise. And it shows us that the simple moving average tends to do better than the exponential moving average, and that the ideal duration is 120 days. It's not that important to take exactly 120. We can also take 110 or 130 or 135. The area here is where we make most gains. And the outperformance is massive. Just have a look at this. This is now the trading strategy. We go both long and short. And as a comparison, we've got Bitcoin here as the white line. Now this is a linear scale. Here we've got the same thing on a logarithmic scale. The outperformance is incredibly constant. And so whenever you're considering what kind of moving average should I take, I think the 120-day simple moving average for Bitcoin is by far the best. Don't take the 100-day, don't take the 200-day. When historically 120 was the best, I think that's the best also going forward. At least the likelihood, I believe, is higher. And so this is then how to potentially time this, right? If we want to get levered exposure to the market, if we want to be long Bitcoin with maybe 2x or 3x, potentially more, depending on your asset allocation across other asset classes. If you want to have more gains and not just make 50% return over the next 12 months, and you still want to be hedged in case we do get our black swan event, then simply selling whenever we fall below that moving average, which is currently at $105,000, I think is the right approach. By the way, if you want to plot this, you simply just go to tradingview.com. You then enter / on your keyboard, and then you enter moving average simple. I've got it here in my favorites. You can just enter this in the search bar. You click on that, you will get a new line on the chart. You double click on the line, and then here in inputs, you adjust this to 120 and you press OK. Make sure that at the same time you have selected the daily ticks over here, because 120 is actually relating to the tick size, not just to the days. This is how I personally play with my risk on money, right? I'm currently very much exposed to Bitcoin. I do believe that it's likely going to continue to go up because of all of the demand by Wall Street. But in case we do turn around for whatever reason, I'm also out very quickly. This kind of risk management allows me to have more exposure than just buying and holding. I'm trying to ride this market with the current momentum as efficiently as possible. Now, the moving average is only one strategy to outperform buying and holding. There's also more complex strategies like shorting altcoins that have very poor tokenomics, where the supply is growing all the time, shorting altcoins that tend to go down long term, at the same time getting even more Bitcoin exposure. It's a strategy that's generating alpha for me over the last 4 years. If you want to learn more about that, it's down below. It's in the premium membership. It's thebitcoinstrategy.com. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.